Let's talk some more of the commodity space with Alan Nuckman, who's a chief market strategist at St. Paul Research. Alan, we've been talking commodities this morning with Ben. You've got U.S. Steel on the mind.
Yeah, and very much the same theme there. He had talked about the dollar index. And so today is the X day. So you can't spell dollar index without the X. So the dollar now at 6-week lows, breaking this little firmness it's had. You got to remember, it's an overall downward trend. This move below 91 is a very big deal. And also, if we're going to talk about X, let's talk about the VIX. The VIX right now is half of what it was in February, and it's 80% below the highs that it saw last year. So a lot of positives could give the market a big boost. But you can see this dollar part is a commodities comeback play, and the dollar down is very, very good for resource stocks.
Okay. So U.S. Steel over the last year has had a pretty wild ride. We were at 650.
Right.
Now we're at 24. So a lot of times you're on here, Alan, trading stocks that have lagged behind. Certainly not doing that today.
Well, it's pulled back some from its highs. It's about 15% off its recent highs here. It is, like you said, up 400% from its lows of last year. But let's remember, this was a $50 stock in 2018. So it's been all over. It's been on the move. It had volatility. And again, volatility is opportunity. But if you look at the price action for the last 5 months, 5 months is traded between 15 and 25. So that puts a midpoint here at the 20 level. So we're leaning on that 20 level. And a breakout of this trading range hits 35. And again, we were at $50 not so long ago. So 35 is not, is not extremely high in comparison. So leaning on that 20 level of support, I'm looking at the July 20 call against stock substitution. The July 20 call is about $4.50 in the money. That option's trading for about $5.50. So the expiration break-even is about $1 higher. Got an 80 delta, and it's got nearly 3 months of time. So a lot of positives from a probability standpoint, looking for the stock to make another leg higher and pay off with that in-the-money option, that strategy that's been successful.
So, Alan, when you say check in on July 7th, why that date?
Well, it's a July strike option because I was looking at the June plays, but the Junes are only $25 less. So why not buy more time? I'm looking for something to happen here in the near term. And if you remember, we did this back here in March and got 100% gain in U.S. Steel right here on this show, right here on this bat channel.
I remember the steel trade.
So it's been done before, but it's set up itself again. What we see now is smart money piling into U.S. Steel once again. And that's a very, very positive sign to go with all this, the chart patterns and all the other components of our option strategy. So that's what we're looking at is the smart money is putting it into play right now. And that's what we're going to piggyback on. And the best part of this strategy is a very modest move in the underlying stock produces a big gain in the option. Again, we're tying up less capital. We've got higher probability. And we've got some time to let this develop if we need it.
Okay. So the level that you're looking at to get out to Alan, because you're looking for a trade on this, you're looking for a pretty quick move. Right. At what point do you bail?
So, well, we'll put in a target at 50% gain on half of our position, and that's just our rule of thumb, and then 100% gain on the second half. So we did that the last time in U.S. Steel here just a few weeks back. Let's see if we can get it strong once again.
All right, going for the double whammy here on X. Got it. Okay. Alan Nuckman, thanks for the trade, sir. Appreciate it. All right. Thanks for the walkthrough. Chief Market Strategist at St. Paul Research. Take a break, and then we'll come back. Get ready. We got a lot of charts to go